It's that time for another Daybreak Crypto review of the markets. What is happening? It is Sunday, right? In early September. No, yeah, Sunday, yeah. I think it's like the 8th, right? Anyway, the markets, if you've noticed, dumped out pretty hard on Friday, which was the 6th of September. Not a surprise to anyone who was observing what was happening, especially if you were monitoring the BEPS. Right? It was quite clear, and we showed it during the Alpha Trading live stream. The probability of the price quick pump to the upside, followed by on Friday early in the day there was a bit of movement already to the downside, followed some hours later by a little bit of a reversal and a move up, and then it kind of staggered on over, indicating another good place to take profits on longs. And then right there during the middle of our live stream, as the markets were opening, it was teetering and tottering at the top there of where it was, and within a half hour or so it started to show its movement to the downside, and a lot of assets went to the downside. Why is that? Well, that's because if you looked at the volatility or the entropy or the variance or the returns, you would have seen on pretty much all of those indicators that the information was saying, people are going to be, it's going to go down. And what happens when things start going down? People start to sell. That's how things go down, right? The indications were, if people are going to start selling now, well, people sold. There was sell pressure. People, computers, algorithms were selling. They were in sell mode. And they dumped out a good 4, 5, 6, 7, 10%, depending on the asset you were trading. Just like that, in a matter of some hours, took roughly, if I'm correct, about 6 or 7 hours. A little bit closer to 8 if you start from the time that they peaked out, before they started really dumping. Right? From the time they were done moving up, they started walking over with some spikes down and back up, down and back up, down and back up, and then eventually just dumped out. And what happened yesterday on Saturday? Well, if you look at the markets that happened yesterday, a lot of them just moved right back up. Some of them almost a third of the way, some of them about a halfway. Right, but they moved back up towards the place they dumped from. They didn't get there, though, in most cases. They didn't even get close, but some did. Some got pretty close. But it's, and not surprising to see that on a day after a big hard dump like that, any bounce back you get is going to be a bit more muted. Right? It does happen a lot. In fact, we saw that last month, pretty much a month ago to the day. Right? So we saw that dump, that hard dump on the 5th of August, but really that dump started on the 29th of July. Right? From the 29th of July all the way down to the 5th of August, assets were dumping. 5th of August, they dumped out hard, and then they bounced back that same day, right? They just started moving right back up, and they didn't really stop for that whole following week until like Thursday, when they actually went back up to a good portion of the way from where they'd come. In many cases, or in most cases, not all the way, but a significant portion. And people who longed those bottoms or near them made significant days gains in just a few days. In like a matter of 3-4 days, those losses were mostly recovered. So anybody who just added to their stack at those bottoms was already in more of a profit, even at a lower price than they were before the prices dumped out, depending on how much powder they added, right? And that can happen. That happens a lot, right? And then the rest of August played out. Right? And so just like now, we've seen this big movement, relatively big movement to the downside. Again, 5% in crypto or even 10% in crypto is not a big movement, but for short-term trading, it's a significant movement. So from like wick to wick, there were moves that easily went, about 10%, 9%, 7%, definitely 5 and 4%, even on the big coins. And that's what the dump out was. And then the bounce back was already 2, 3, 4%, in some cases 7% or 6%, whatever, but they haven't recovered all the way. And they bounced back nicely on Saturday, to be followed by a little bit of, a walk down and then a walk back up in the late hours of the Saturday candles on crypto, and then the early hours of the Sunday candle. Right? So the last I looked, about maybe an hour ago, they're basically right where they were, about 8 or 10 hours ago, before they started to dump down a little from that little rise they had all day on Saturday. So what does that tell you? Anything? Price does not tell you anything about the future price just by itself. Price can actually tell you something else. Right? And we can tell things about the future when we trade the VEPs using future-looking things like reverse mean to log returns. We are able to tell what the direction of the future reverse mean to log returns, or the future RMLR. We're able to tell what the direction of the future RMLR will be. Well, why does that matter, you think? Well, if you know that assets do basically two things, they distribute away from the means and they mean revert to the means. Well, then if you know where the future means are, whether they're the straight regular mean or the reverse means, either one, if you know where they are going in the future, you can tell a lot about an asset. Like when it's distributing or when it's in mean reversion with accuracy. You can actually know when it actually is doing this for certain, right? Or extremely probably. More than 99.7% probability of doing one thing or the other. Right? You can always tell when it's mean or when it's moving away from the mean, when it's distributing, when it's distributing away from the mean. Hello, what do you write here? What's up, dude? How you been? I've been all right. How you been? Good to see you. What questions you got about? You got any questions about crypto, or just how you been? How you been? I've been all right. How you been? Yeah, you can always tell when an asset is distributing away from the mean because, well, you see it moving away from the mean. You see the returns literally moving away from the mean of returns. And you'll see that the asset, in terms of price action, is also moving away. Generally, it's following the returns. So when the returns are moving away from the mean, the price action will typically be moving away from the mean as well. And I mean the mean of returns, not the mean of price. And when the returns are mean reverting, that is heading back to the mean of returns, the price action will typically be doing the same. And the fact that you can know the future RMLR with any degree of certainty is an amazing mathematical fact that most people who even trade are not aware of. Even most people who trade the VEPs at HFT firms are probably not aware of that because they're not aware of our little discovery, which we discovered at Alpha Trading. Or if they are, it's certainly not something that they share with anybody. Because if you go look up the information about the reverse mean log returns and the future indicator of it, there's only one place that'll give you authoritative information, right? And that's us. Now, they may have by now found it. Somebody might have. But it's certainly not widespread. It's trading's best kept little secret at the moment. So is our Laplace volatility indicator, right? It's like the AVR, like the historical volatility indicator that uses normal distribution. So we made one that uses Laplace distribution. Why? Well, it's very handy. It works very nicely, especially when you use it together with other Laplace indicators that we have. The Laplace deviation bands, the Laplace pseudo-Laplace z-score, Laplace projection boss. There's all kinds of wonderful Laplace tools that we've built in Alpha Trading. Our indicator makers are amazing. They're the best in the business, in my opinion. And yeah, and that's why we really like the work they do, because they're frankly they make the best tools available to retail. That's why they're our brain trust. They literally built the best tools for trading that you can get if you're a retail trader. That is not an easy feat in a world where you have literally thousands of trading indicators. But the thing is, all those trading indicators are all built on something that we don't use because it's lagging information. Right? They build their indicators based on price. In our case, the only thing we use price for is to correlate certain things, or to know certain things as they relate to the returns or the means or both. Right? Price by itself is a lagging indicator. It by itself cannot tell you anything about leading information by itself. You need to use it with returns or means or entropy or variance or something to be able to determine anything about the future. And you can't base those calculations for the future just based on price. That's not going to work. You need to base those calculations for the future based on returns and means and entropy and all those things. That's why we use the leading information, because that gives you a higher probability of knowing what is likely to happen on this current candle and the next ones. In traditional TA, there is no probability of knowing what's going to happen on this candle or the next one, especially when the people that make and sell those tools will tell you themselves, yeah, this works about 30% of the time. I'm sorry, what? Yeah, the best indicators they have, quote unquote, work about 30% of the time. That means they fail 70% of the time, right? If you're using tools that fail 70% of the time, they're not really tools. They're just junk, right? A tool is something you can use and rely on to do consistently, do what it says it's going to do. If your tools don't consistently do what they advertise they do, then they're just junk. They're not tools. They're not reliable. You know, they might be toys, but they're not tools. Anyway, if you want to get your hands on some real tools for free about how to learn how to trade volatility, probability, and statistics, you can do that. Just go to the Alpha Trading Discord at alphatradinghq.com/Discord, and you can get free access to the volatility starter trading indicator pack. And we do live streams there Monday through Friday, starting at 9 a.m. Eastern Time. And that's going to do it for now. Happy trading. Oh, yeah, by the way, if you're wondering what's the market likely to do next?
Well, you read the VEPs, you don't have to ask yourself that. If you know how to read the VEPs.
And when people say, oh, you never know which way the market's going to go in the short term. That's just gambling. No, if you read the VEPs, it's not gambling. If you read the VEPs properly and you take actions properly, it's not gambling. Yeah, can I see that? Yes, Toby, I can see that. Hello, Toby, I can see chat. So, yes, to answer your question, I can see chat. Good to see you. If you have any questions, feel free to ask. I was just about to wrap up this live stream, though. But if you do have questions, I will gladly answer any questions you might have about the VEPs or anything related to it. And if you don't, well, that's okay too. All right. Okay, that's going to do it for now, I think. So, all right. Okay, well, yeah. Okay, that's going to do it for now, folks. See you guys. Happy trading and all that stuff. Cheers.